Welcome back. You're watching Business Lunch. Now, before we went into a break, we had numbers coming in from Voltas, and it looked like a set much better than what the expectations had thrown up. So Mangalam is here to tell us what has actually driven this beat. Mangalam.
Well, like you said, Sumera, all the reported numbers on the revenue front, the EBITDA front and the net profit front are a big beat. But despite that, the stock is taking a big knock. And there are a couple of reasons for that. One, it had seen a near 40% run up from the lows. Secondly, the beat has been led by a couple of things. One, the enterprise business, not the consumer business, the ACs that you and I use at our houses. Out there, the revenue has actually declined by 60%. That's pretty much what the street was working with this time around as well. It's the enterprise business. Out there, the street was factoring a much larger revenue decline of almost 65 to 70 odd percent. Out there, the revenue hasn't declined by that much. In fact, it's declined just by around 37 odd percent. And this, despite this, we've seen that division post a bit of an EBIT loss. However, the reason why the EBITDA is a bit of a beat is primarily because the other expenses have been curtailed by about 25 odd percent. So that's coming at 165 crores. This compares with 219 crores. And the net profit is a beat because of lower effective tax rate. So in a sense, the company sold as less of room air conditioners as people expected it to, but their enterprise business supported the revenue, which was a bit of a beat. And over and above all of that, the stock price rally means that post these numbers, there has been a bit of profit taking, which is why we're seeing a decline on the Voltas stock price.
All right, thanks so much, Mangalam, for getting us the analysis and the first cut on Voltas numbers. Let's shift focus to the telecom space, and sources tell us that Bharti Airtel as well as Vodafone Idea are planning a next round of tariff hikes in September or October. Kritika Saxena joins us with exclusive details. Now, Kritika, obviously, tables have turned for the telecom industry, especially during pandemic, and therefore, they will make use of this situation.
Well, remember, in December, a massive tariff hike had been implemented across telecom companies, including Bharti Airtel, Vodafone Idea, Reliance Jio. They started from 10% and went up to 40%. Now, we understand that a second tariff hike is likely soon, but this time around, we're not going to see a significant jump. What may happen, according to our sources, is that they are going to stagger it across their various tariff plans and across time. So, perhaps over the next 1 year, these tariff hikes are going to be implemented, and they'll be done in a manner to ensure that the pain to the customers is as less as possible. So to begin with, we understand that a hike of about 2 to 5% is likely in select plans, and this could go up to 10% in the medium term. So that's what our sources are telling us at this point. Both Bharti Airtel and Vodafone Idea are looking at doing this at this point. We haven't been able to confirm plans as far as Jio is concerned, but you know, a tariff hike, according to my sources in these two companies, is going to be the lever that they need to be able to increase ARPUs, even if the Supreme Court does agree to a 15 to 20 year staggered payment tenure. Even at that point, they will need the tariff hike. But a final decision, I understand from my sources, is going to be taken once the AGR verdict is in. And of course, a lot of decisions are just pending the AGR verdict, and then they can decide operationally what the road forward is. No comments from Bharti Airtel. Vodafone Idea says that this is speculative.
Kritika, thanks much. Let's move on then. India's third largest commercial vehicle maker, Volvo Eicher Commercial Vehicles, has announced that it will acquire Volvo Bus Corp's India business via a slump sale of 100 crore rupees. Alisha Sachdev caught up with Vinod Agarwal, MD and CEO of VECV, and Akash Passy of Volvo Bus Corp to understand the process behind this transaction and what the joint venture holds for both companies.
Volvo Eicher is now this joint venture. Number one, it is highly successful for last 12 years. We have done a lot of joint projects together, and we have realized a lot of synergies in our partnership. And this is a next step now in realizing these synergies together. And by putting both these businesses into one bus division, Volvo Bus India as well as Eicher Bus business, I think we will create tremendous opportunities. We will be able to offer much wider range of choices to the customers. And as you know, our vision in VECV has been driving modernization in the commercial transportation. As part of that, when we bring both these brands together in one bus division, we will be able to shape the entire future of the bus industry. And going forward, there will be a lot of synergies, not only in the areas of product development, but in purchasing and manufacturing. And VCV will have access to Volvo Group's global technology in the buses products. And if you look at the India market position also, Volvo buses operate in a very high-end premium segment. And if you come out of that premium segment, then there is a mass market segment where the price positioning is at a very you can say tent from the current price positioning of Volvo bus. So the entire space between Volvo bus price positioning and the mass market price positioning, the entire space is vacant. So there will be tremendous possibilities to bring in products to cover that space, which will be again beneficial for the customers.
I'd like to say that we are very pleased with this step of Volvo Buses India moving into VECV. VE Commercial Vehicles is one of the most successful joint ventures Volvo Group has worldwide, and that's very well recognized. Having said that, then specifically with the Volvo Buses India integrating into VE Commercial Vehicles, we see better possibilities of cost optimization. We see better possibilities of market adaptation.
So as we focus on restarting India, onto a CNBC TV18 exclusive on that, rail, road and port traffic is seen at 85 to 90% of the pre-COVID levels in the month of July. My colleague Anu Sharma gets us all the details on that. Anu.
Right. So we checked the demand situation as far as freight traffic is concerned since the month of April, and we reached out to ICRA and CRISIL. So ICRA says that e-way bill generation has revived to 85% of pre-COVID levels, and similar is the case for FASTag collections in terms of volume. If you look at railway freight volumes, they are at 90% of pre-COVID levels, and similarly, seaways freight traffic have revived to 85 to 90% of pre-COVID levels in July. So there is a general improvement in all these segments in the month of July. There are issues in terms of near-term demand, and that is why they have warned that logistics sector, including warehousing, are likely to see very sharp pressures on demand in the near term. But there is a general recovery which is anticipated in the months to come. If we talk about CRISIL Infrastructure Advisory, they have said that there is a general clawback in freight traffic in the month of July, and for the full financial year, they expect a contraction of 12 to 14% in the ground transport segments, because primarily rail and port freight traffic have contracted by 18% during the first quarter of the current financial year, and there is a 25 to 30% contraction in road freight traffic. Overall, the challenges remain that there can be a shortage of labor, there can be individual lockdown by states, and there can also be a lack of return cargo. But then a significant scenario here for all kind of segments, because there is a recovery which is expected in the months to come. For now, back to you.
Anu, thanks very much. A quick break. On the other side, the government widens the tax base for better compliance and transparency. We'll tell you what the changes are on the other side. Stay tuned.